Now time for lesson 2. Hopefully you got a lot of advice in that first lesson on clearing your brain, because today we're jumping back to the complete basics. So if you guys are just learning how to trade, this is going to be a perfect place for you guys to learn. And if you already know this stuff, well, it doesn't hurt to get a quick little refresher. So again, let me jump over to my screen and share what we're going to be going over. And I'm going to jump back from the charts to my PDF to kind of make sure I cover everything for you guys. First thing we're going to go over is candlestick anatomy. All right, so we're going to go over what each part of the candlestick is and what it exactly means, so that when you guys are reading charts and you see candlesticks on a chart, you understand what each candlestick means. And by the end of this lesson, you guys are going to understand it for yourself. So first thing we're going to go over are the different parts on a candle. And I'm going to show you guys here in just a little bit, but we're going to read through it together and then I'm going to go describe what each part is. The body of a candlestick shows where price opened and where price closed. All right, so the body of the candle shows where that candle opened and where that candle closed. And now the wicks. All right, so you're going to see these long wicks on each side, and this is going to show where the highest and the lowest price reached during that candle. Okay, and then you have the open where price started, and then you have the close where price finished. So we're going to go over and I'm going to break down a candlestick for you guys right now. So I'm going to pick out a random one. We're going to have this one right here, this candlestick right here. Okay, so you can see we have our body. Our body is this big block. And remember, what the body shows us is where price opens and where price closes during that time of the candle. And then we have our wicks. You can see both of these wicks coming out from the top and coming from the bottom. This is showing where the highest point was reached and the lowest point was reached during that candle. So we can see price opened right here. We can see it right there. Price opened the bottom of this body. And we can see price reached a low of all the way right here where the bottom of this wick went. And price reached all the way up to the high of this wick. And then we finally closed right here. Okay, so remember the wick right here is the highest point reached in the candle. The lowest wick would be the lowest point reached in this candle. And then you have the body, which means it shows where it opened and then shows where it closed. Now, it's very important to understand the basics of candlesticks before we move on into anything further. So let's look at a bearish candlestick. So we can see a bearish candlestick, which means it would be a red candlestick. We just went over a green candlestick and a bullish candlestick because it opened and then it closed higher than where it opened. That would be a green candlestick. Now, a red candlestick is going to be just opposite of that. It's going to open here and it's going to close lower, making it a red candle, but the same anatomy accounts for it. Okay, so we get our open right here. We get our close right down here, but if you can see, there's no wick below this because it closed at the lowest point of that candle, not creating any wicks. So let's watch this candle kind of form. We got 30 seconds on this candle, and you can see how this moves, and it'll make sense to you. So if you see there's no wick on top because we're at the highest point right now of that candle, boom, we start going down. Now it has this wick right here. On top of that, it also flipped red because now it's lower than where it opened at right here. So now we have 8 seconds before we figure out where this candle will close. So now you can see up, it's bouncing up. We see our wick all the way down here because that was the lowest point this candle reached. And then boom, right there, we get our close, which is lower than where this candle opened. And now we get our new candle. Okay. All right. Enough of that. Next, we're going to go over bullish and bearish candles. A bullish candle means price closed higher than it opened, kind of like we were just talking about through that. And then a bearish candle means price closed lower than where it opened. Now that you can put candles together, they form patterns. Okay, there's lots of different patterns that go into candles because we're just talking about a singular candle right now, right? We're not going into anything else deeper than that. So we just need to understand what a candlestick is, how it forms, what it means, what each part of it means. And then we're going to go into time frames because each one of these candles represents a specific time in the market. So there is higher time frame and there is lower time frame. Right here, HTF means higher time frame, LTF means lower time frame. If you hear us talking about that in the chat room, that is what those mean. Now, here's where most beginners get lost. A candlestick isn't just random. All right, it represents a block of time in price action. So if we are on the 1 minute chart, one candle equals 1 minute of price action. Now, if we're on the 5 minute chart, each candle represents 5 minutes of price action. And then if we're on the 1 hour, it's 1 hour per candle, 4 hours per candle, and so forth. So if we go back to here on my chart, I'm on the 1 minute. This is saying if I'm on the 1 minute chart up here, every single one of these candles represents 1 minute in price action. If I step up to the 5 minute, each one of these candles represents 5 minutes of price action. So this is 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes, 5 minutes. If I step up all the way to the 1 hour and we're getting into a higher time frame, you can see each one of these candles represents 1 hour of price action. And that so forth, we can go to the daily. Each one of these candles represents 1 full day of price action. Okay, hopefully that makes sense to you guys. Now, the difference between higher time frame and lower time frame. So higher time frame, we're going to be looking for the whole market structure. You're normally looking at the 1 hour, the 4 hour, the daily to see the bigger picture in the whole entire market. But we're taking our entries on the lower time frame, the 1 minute, the 5 minute, the 15 minute. So those are the two different time frames, higher time frame, lower time frame. And what these time frames mean, it's how much price action they're showing per candle that you see on your chart. Now, just to recap, candlesticks show the fight between buyers and sellers. So if it's a green candle, it's showing that the buyers won that fight and it is a green candle. So it's constantly a battle between buyers and sellers, and that is exactly what candles are showing us, is that fight between them and who's winning. Now, bullish equals green price, bearish equals red price. Each time frame means each candle, okay? It's that unit of time. So each time frame is equal to each candle. High time frame shows the trend, low time frame shows the entry. Okay, that's going to conclude lesson number 2. I hope you guys can understand what candlesticks are. If you are having a bit of a hard time learning what I just spoke to you about or taught, rewatch the video. Rewatch it until you can understand it. And then once you understand it, you're ready to move on to lesson number 3.